Hello and welcome, ladies and gentlemen, to our first instalment in the Bite-Size Basics series. This one today is on Bitcoin. My name is Matt Harry. I am an investment partner at Apollo Crypto. And over the next 15 minutes, I am hopeful that I will give you a very basic understanding of how Bitcoin works, why it's valuable, and where we see it headed. There are several other installments in this series. Please reach out to us if you'd like to learn more in terms of the basics around Solana, Ethereum, and also DeFi. For now, we will jump into this presentation. Usual disclaimer. Okay, so in terms of an overview, Bitcoin was created in 2009 by Satoshi Nakamoto as a way that individuals could regain control of their financial sovereignty. It enables the transfer and storage of funds or wealth without restriction in a fast, cheap, and highly secure manner. It has proven to be an excellent store of value over its now 16-year history. And because it has zero weight, cannot be counterfeited, is highly divisible up to 100 million places, non-sovereign, and extremely secure, we refer to it as a digital gold. But you will, without too much mental gymnastics, if you consider these things here, zero weight, can't be counterfeited, etc., certainly fulfill many of the properties of sound money far better than what gold itself does. So we believe it's a far superior digital form of value store than gold itself. In January 24, we saw the arrival of spot Bitcoin ETFs, now allowing institutional investors to allocate to the crypto asset class with regulatory certainty. These ETFs have been the most successful ETF launches ever seen, specifically the Bitcoin ETFs. The first gold ETF took 5 years to reach 50 billion in assets under management. The Bitcoin ETF took 51 days, so a lot of demand for these products and to hold Bitcoin in portfolios. We'll strip it down a little bit here in terms of the halvings and the mining process. Bitcoin runs on blockchain technology. It is issued and secured by the mining process. Bitcoin mining is the process of verifying transactions on the Bitcoin blockchain by solving mathematical equations using computational power. So the first miner, as such, to solve the mathematical equation is awarded Bitcoin and also places the next block in the Bitcoin blockchain. So that's the issuance of new Bitcoin to the successful solver. So we're creating a block approximately every 10 minutes, and that miner is getting rewarded for the work that they are contributing in solving the equation. Everyone running the Bitcoin software can verify that all transactions are valid. So that's proof of work. Before they are actually verified and added to the Bitcoin blockchain. So that makes the Bitcoin network highly secure. The rate at which new Bitcoin's mined or issued into the market is predetermined. It's hardwired in code and undergoes a halving every 4 years. That's an amount at a point in time, the amount of Bitcoin that is being issued into the market every 10 minutes halves, and that's happening every 4 years. We will come back to that. So previous halvings have created supply shocks that have precipitated major price appreciation in the 18 months subsequent to those dates. Most recent halving happening last year in April 2024. So just circling back to the digital gold bit, Bitcoin, often likened to gold due to its hard store of value and non-sovereign nature, is increasingly being seen as a hedge against inflation and sovereign risks associated with government-backed fiat currencies. We believe Bitcoin offers a more compelling investment case than gold for several reasons. You'll see there on the right-hand side of this particular slide, it runs through a bunch of characteristics of sound money, which we believe Bitcoin satisfies far better than gold, and certainly far, far better than cash. If you look at cash, it's really lacking in many of those ways that Bitcoin provides positive functionality. In terms of scarcity, Bitcoin's issuance rate is currently 0.8% annually, and that will continue to decline with future halvings. If you contrast that with gold, gold's got an issuance rate of 2.3%, and as gold prices increase, so does the amount of gold being mined. So it's very, very reflexive. Conversely, Bitcoin's supply rate is absolutely fixed. It can't be changed regardless of price. Certainly attracting the attention of investors. We've seen it go from 6 cents to beyond 100,000 US dollars per coin in 15 years. In terms of scalability, transacting with gold is very slow and expensive. Bitcoin can be sent over the internet almost instantaneously and is considered a hard store of value internet money for the digital age. And also, again, verifiability, which is another area in which we believe Bitcoin is far superior to gold. Bitcoin transactions are verified over the network. Achieving finality within an hour. Gold verification is extremely costly and time-consuming. And there are many issues with counterfeiting of gold. You cannot counterfeit Bitcoin. Really strong adoption to this point. In fact, Bitcoin's been adopted at a faster rate than the internet during its first 15 years since inception. Digitally native millennials really prefer digital assets. In fact, a study out of Charles Schwab in 2019, it's getting a little long in the tooth now, but it did show that the 5th largest holding in millennial portfolios was actually Bitcoin, and these millennials are set to inherit 68 trillion US dollars from their boomer parents in the next sort of 5 years. And incidentally, they also are now the highest income generating demographic. So they prefer holding value digitally. They're very comfortable with that. They've got a mistrust or distrust of financial institutions, having grown up in the shadow of the GFC, very much looking to take back control of their financial future, and digital assets, Bitcoin more specifically, are very much fitting the bill. We're seeing increasing institutional and sovereign participation, the arrival of BlackRock, Fidelity. We're seeing Bitcoin now classed as legal tender in Brazil. It's a reserve asset in El Salvador, and the US government has recently stated its intention to hold Bitcoin as a Federal Reserve asset also. So huge things about to happen there. In terms of this kind of oversupply of traditional currencies in recent years, we've seen a global inflation rate over the last 3 years of about 7-8%. Bitcoin, we've already been through that, it's happening at a rate more quicker than internet and mobile phones. So we're seeing the erosion of value of fiat currencies through oversupply. Bitcoin fixes that, or is a solution for that. Just a bit of a cute slide here, seeing this comes up to 2020, and I believe the actual numerical value there is 0.385 or 3.85 cents of US dollar purchasing power. When compared to 100 years ago, that has not only continued to go down, but it has accelerated with the massive increase in M2 in the past 4 years. In terms of total addressable market cap, Bitcoin's only 2 trillion, so it's 1/9 the size of gold's market cap of about 17 trillion. So we see a huge amount of growth opportunity if this is widely adopted as the new store of value, which it certainly seems to be. More widely, crypto assets could stand to experience significant growth as an emerging asset class. Current cap sits around 3 trillion, whereas the global equity market sits at 120 trillion. So we're just at a 2.8% share. Considering this market can be 24/7 and it is highly liquid, we see it stealing significant share away from global equities also as things become tokenized. You'll see here the previous halvings in action. I did mention that after each halving, we tend to see about 18 months of rapid price appreciation. previous halvings marked out there on the chart: November 12, July 16, May 20, and April 2024. We are right in the middle of what we would consider a major bull run for crypto assets. Our target, the Apollo target for Bitcoin, is to be at $200,000 per coin by the end of this cycle, heading into 2026. So we're still seeing a huge amount of growth happening currently, despite currently being in a little bit of a pullback, which we see during all of these crypto bull markets. That's it from me for today. Very short and sweet. If you'd like to know more, you can reach out to myself or Henrik. Our contact details are there. Hopefully that gives you a base understanding of what Bitcoin is. And we are here to help you continue on your journey of learning. So thanks for joining me today, and hopefully we hear from you soon. Bye for now.